as frustrated as I get with politicians, I don't not understand why they make the decisions they make.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots. And I'm joined, as always, by the brain trust himself, Mr. Chase Taylor. Lot of, well, it's kind of a quiet day, actually. This feels like kind of a typical summer day. You know what I mean?
Yeah, not a lot of news, not a lot of data.
Not a lot of big movements. Why don't you give us a rundown on the indexes? One of the questions, I've got a couple questions for you, but yeah, let's hit up the indexes.
S&P closed up half percent, Q's up 0.65, IWM barely up, equal weight also up 0.5%, Mag 7 down 0.2, all world ex-US up 0.2, dollar down about another 0.5%, oil down like about 0.6, just magnet to that 65 area. Gold up about 0.6, silver down a little bit. You have rates down about 2 basis points on the front end, about 4 on the long end. So you actually have the 10-year down to 4.23 now, so that's cool, a decent amount. And we closed the quarter on the 30-year below 4.8, which is a just massive line on a quarterly chart. So a really long-term line. We hung up above it almost the whole quarter. And then the day the quarter ends, you jumped below it. So that was interesting. And then vol, you're down to 18.7 now.
Wonder what again, the movement or the behavior around rates to me is just weird. I'm not, and I don't know what's going on. I'm not alleging. I don't know. I don't have any other way to describe rates right now, as it just feels very unnatural. Does it feel somewhat like?
Well, I mean, it is unnatural. If you think about as we wait for the debt ceiling to get passed, they're doing essentially no issuance of treasuries, which is like almost like a weird, fake supply and demand suppression. So after they, pass that legislation, they have to refill the TGA and go flying back in with issuance. Then the pricing gets a little more, I'll call it realistic. But at the same time, we've talked about, well, real estate's cooling and jobs, like, they're not terrible, they're not great, but it's slowing. So like I saw a chart today of like hard data surprises, like versus expectations, and that has deteriorated lately. So I say there's enough growth concerns to kind of pull rates down some. And now you have we're going to get a new Fed chair that's just going to like slash rates and do whatever Trump wants. Like, I think that has actually made its way into the price some. People expecting, big rate cuts or having a shadow, Fed chair for a few months or whatever. So that may be leaning on it a bit itself.
For those of you that don't know, if you're thinking to yourself, what in the world is a TGA? Two things. A, yes, we do dig that deep. I say we. It's virtually always Chase that's digging that deep, but I'm going to take credit for it because it is my firm.
Write the checks around here.
It's the royal we. It's the royal we. But the TGA is effectively the checking account for the federal government, where they pay stuff out of, right? Where they pay interest on the bonds it's the checking account.
It is truly the checking account. Yeah.
So when you sell bonds, that money has to go somewhere. That money goes into the TGA, and that's what funds the government. So that's what Chase is talking about. And the reason that we've dug into that and the reason we've looked at it is because in a world where, we've spent the vast majority of our careers and educational time, studying finance and economics, right? The plumbing, the way it works. But, and this is always the case, but I think it's more true today than ever before, which is if you had a classical understanding of economics and a very deep classical understanding of economics, I think in a lot of ways it would make it harder for you to understand the current picture. Because you're not just looking at economics anymore. You have to look at structural flows. And why is that? Because we live in a world of fiat currencies, and every single economic speed bump, every issue, they attempt to just paper over it. So understanding where that money comes from, how it moves through the system, it's important. It's important. Like we've said before, traditionally the biggest source, now outside of a one-off here and there, like, there's always exceptions, but when we look at the growth of capital, over time, the biggest source of capital historically for the United States has been innovation. Right. And people are like, Zach, what do you mean? They go, well, this is a very rudimentary, like basic way to explain it. But if we make widgets for $5 and all of a sudden somebody uncovers new technology that allows us to make those same widgets for $3, you just freed up $2 in the system to go somewhere else. Right. That's where innovation drives that. And now we live in a period of time where the greatest, the greatest source of new capital is the federal government. And that institutes a lot of different dynamics, and you've got to be aware of those, right? Anything you want to add to that?
No, that's good.
You gotta understand those flow things. So that's interesting. That's what I've been seeing then, is them holding back because of the bill. You're just watching rates, and it just feels extraordinarily abnormal. It's almost like they were given a tranquilizer or something.
Yeah, and both the front end and the long end, to me, like I think both are over their skis at this point. Being too, like, expecting too much cuts. Now I think every angry, Truth Social post about how we should be slashing rates, like maybe it has a little role where people think it's going to turn into policy, and so they get out of the way or whatever. But I don't know. And along those lines, I mean, today Trump called for 1% rates, so that would be a 3.5% cut, while also telling, the GOP congressional folks, like, hey, like, we can't cut too much, guys. And like, if you want to get reelected, also, like, we're going to grow our way out of this. We're going to grow so hard. It's going to be 10 times what this would do to the deficit. It's like, you think about these two, like, different, like, takes on the same thing. It's like, well, if you're wondering why they won't cut, like, part of it's because you're telling them we're going to grow the hell out of the economy by running it really hot with this giant deficit. Like, that's one of the reasons they don't want to cut.
Yeah. Well, here's another, and I was thinking about this over the weekend. And now that I said this, you're probably going to want to go out in short duration after this, but I feel very confident.
I don't need a reason to want to do that.
Yeah, no. I feel very confident that when they cut, they will not lose the 30-year. And let me explain why. Not out of natural dynamics, but it was one of those things that just kind of hit me all of a sudden, where I went, wait a second. Why is oil where it's at right now? It's because OPEC's increasing supply. You and I both know why OPEC's doing that. They're doing Trump for their favor, right?
In part, yeah.
When you look at that part of it, in part, and then you look at how our quote unquote trade talks with Canada have gone over the last 3 days, there's a reality here that I don't think that we should take too much solace in, because I don't think it's a good thing as an American citizen. But we have the ability to project far more power around the world than I think we get given credit for here domestically. Meaning, I think we forget sometimes here that we're America, right? Like Carney up there with all of his tough talk. Trump said no more trade talks with Canada, and the dude just about faced right away, right? What I'm saying is, if he started to lose the back end, I think he makes calls around and I think central banks start jumping in and buying the 30-year down. I think it's going to be a non-event.
Yeah, and I'm not saying they're going to lose it, but I just think, medium term, long term, on a real value basis, long-term treasuries are going to get absolutely smashed.
Well, yeah, because eventually, and I think eventually could be not that far in the future. Eventually, you just have an issuance problem, right? Like,
which is why they're just kind of not going to issue the long end. I mean, and Bessent today kind of reiterated that. Basically said, yeah, where rates are, there's just no point in terming out. Like, problem is, when will there be becomes the question, Well,
and this gets into the old, and you've got a sign in your office that says this. You want to do those things when you can do them, not when you have to.
Yeah.
And that's I hear Besson say that and I go, why do I feel like it's like a baked in certainty that at some point over the next few years, we're going to have to sell duration at significantly higher than current levels?
Yeah. I mean, it's very possible. Like we, much like Japan, like we're tempting fate when it comes to inflation. There's really no two ways about that. Now, obviously, as you and I have discussed a lot on the show, like there's plenty of reasons to suggest it's not that bad of a thing. It's at least not all bad. I think a lot of things.
Well, look, for instance, and I think we all need to kind of change our view on this in a little bit, and I'll even throw myself in this where I think we're a little bit paranoid. When you think about the way out of where we're at economically right now, you got to be running at 4 to 5% inflation.
Yeah, I can't argue with that at all.
So, I mean, in that way, Trump's right. I mean, he's framing it differently, but what he's saying is correct. He's saying you're not going to grow out of it. You're going to inflate it away. We're going to grow our way out. It sounds so much, more cool, right?
Yeah.
But it's the same thing, right? One or the other. But I mean, he is correct like that. I mean, don't you think we should set policy in a way right now where the Fed targets 3.5 to 4% inflation and says we're going to let it run?
I don't know about an explicit target that high, but tolerating anything sub 4 is probably fine. Like honestly, and especially if you're the Fed, because
I think we have to go above.
You can't raise taxes,
but we have to go above 4.
Well,
if we're going to inflate our way out of this,
there are people that would argue, yeah, you need to be double digits for a few years to actually inflate your way out. But a lot of people get hurt in that environment, and
oof.
Like even we've got up to 8. Even at that level, like you're going to lose the election. So like it's that weird balance between the two. And his message to the GOP congressional folks, like obviously spot on. Like you go slashing the budget, you're not going to win. But if you go and stoking the embers of inflation too hard, you're also not going to win. So it's a weird catch-22 between those two things. Our buddy Luke Roman had a good quote he tweeted out today from Jean-Claude Juncker. He said, well, we all know what to do. It's just we don't know how to get elected after we do it.
That is great.
It's perfect. Yeah.
That is absolutely perfect. And it gets me thinking, kind of taking a more cultural steer here, if you think about it. One of the things that I think is hurting America and that we're suffering from writ large is short-term thinking. And it seems like it gets shorter and shorter and shorter.
Yep.
How do you address that? What do you, because we have to. I mean, what he said is 100% correct. And that is part of the problem, meaning part of, as frustrated as I get with politicians, I don't not understand why they make the decisions they make. I mean, it's very, they're right. If you do what you need to do, if you take the medicine that nobody likes, you're not going to get elected. There was a time, and look, democracies always work like that to an extent, but most of the time in this country, people would kind of grit and bear it, and we'd all agree, yeah, you know what, it's not going to be fun, but we got to do it. Right. You know what I mean?
And you think about places like China, where like it's like there's like a real like a genuine national pride for like they refer to it as like eating bitterness. Mm-hmm. Like we just don't really have that. There's not a national sport to like bear some pain here at all, And it didn't used to be that way.
Absolutely. And I don't know I don't know if that's become is that a cultural thing that happens to cultures at all?
I would argue that's yes, but I how you get around it though, I don't know. And politically, it's kind of clear. It's things like term limits and things where it's like, look, you get your 1-2 little shots at this, and you're not running for re-election anyway. So if you got a plurality of people that aren't running for re-election anyway, then they can maybe put the country first instead of getting re-elected first.
And I hate to say this because I have such an affinity for the idea of term limits. I just love it. But I've also seen enough of these things backfire to where I'm not saying I'm against term limits whatsoever. But I have a sneaky suspicion that whatever benefit term limits bring, they're also going to bring drawbacks.
Like everything does, right?
Yeah.
Everything's a trade-off.
And that's the other thing that we forgot culturally is I call it thinking like an adult, right? We've just lost that ability as a culture to accept the fact that things have costs and there are trade-offs, right? There are no free lunches.
Yep.
There are no free lunches. And that's as true today as it ever was. The other part of it makes me kind of think too, that is some of this short-term thinking and some of the financial nihilism, as Dimitri called it, is seeing at least what appears to be kind of some terminal signs, as it relates to our debt outlook. Well, I mean, look, or just even the next 10 years, right? For instance, I would not want to be I would not want to be a young person trying to build a life over the next 10 years.
No. And for essentially all of our history, we always felt like, well, the next generation, man, they got it good. Like this is going to be good for them.
Yeah.
And now it's a little different. You feel like, I don't know.
Yeah. It's a little dicey
getting a job, especially in this AI world and the cost of certain things. Like, there's a lot of reasons you're kind of wondering, is it going to be? Now you can definitely lay out reasons where it's like, wow, like they're going to have it better than anyone's ever had it. But there are some other ways where you're like, not a great time to try and build something.
Yeah. And there are some massive unknowns. And you brought up AI. One of the things we've been thinking about lately, and I'm sure it's a little more complicated than this because I am not a technology expert and, by any stretch of the imagination, but we talked about a little bit the other day. One of the reasons I think that, first of all, I think AI is going to transform a lot of things. I think it already is.
Basically everything.
Yeah, basically everything. But look at all the wealthiest companies in the world, right? They're all technology companies, right? Highest margins, incredible businesses, all that kind of stuff. What is the genesis of their power and wealth? If you think about what has made them so successful, the moat around their business is the fact that those companies have employed the best and smartest programmers and coders in the world, right? And to access them, right, to get the benefit of the work and the incredible engineering they do, we've got to go buy the products of those companies, right? Well, to my understanding, if I understand it correctly, in a very short period of time, AI is going to be able to code better than any human engineer. Now, I would think that there are some probably like creative realms of coding or some maybe different kinds where people have an advantage still.
And where you probably still want a good human in the loop and like working side by side. I think a lot of AI is going to be helpful to humans, not necessarily replacing, especially in that kind of work.
But what I do think is, one of the biggest crazes of this whole market cycle has been software as a service. I think that business model is in trouble.
Yeah, you talked about this before it's funny because my buddy Rupert, the blind squirrel, hit me up after you talked about this because it's kind of been his thesis is truly the same as yours. You guys both arrived at it independently of like, why wouldn't this just like make some of these people, irrelevant? Because if I can just, they're a glorified middleman between me and some technology and I can just do it myself. And there's all kinds of stuff. Like you think about that today. I mean, you used to have an army of people typing, right? Like that's not a thing anymore. You think of all these jobs that used to be like a whole floor of a skyscraper was doing a job that's not a thing anymore.
Yeah.
Think of the spreadsheet. Think about all the jobs that disintermediated. This is just going to do that for all kinds of jobs that seemed like they, wouldn't go away to us because we're living in this time. And some of it's going to be, like everyone got told to learn to code. Whenever, all the manufacturing went to China or whatever, now it's like, well, crap, maybe not code.
Yeah.
Maybe something else. But an interesting, like paradoxical flip side of that is you have Meta paying these like AI engineers like LeBron James money.
Yeah. So
you get this weird stratification of like, if you're in that ecosystem and you're elite, you're now just in 100 million might be a bargain for some of these individuals.
And my understanding, that was just a signing bonus.
Yeah. And if you think about, so like all the great entrepreneurs that have come out of technology have made this point. Like it's one that Steve Jobs like really hammered home was, in a factory, like the top worker and then like the middle worker, like
the difference.
There's a difference, but like it's just not a huge deal. Maybe you get 2x out of your best individual versus that median, or But in technology, in engineering and technology and software and stuff, the best person is a 100x return over that median person. So if you have the elite person, that may be like the thing that makes the difference, So it's weird to see both of these things exist at the same time, where individuals that do highly technical work get valued at a rate that would have seemed impossible a year ago. At the same time that you're looking at it and like, well, we don't need people to do this swath of this similar kind of work. It's just, I don't know, interesting dichotomy.
Yeah. And I can't remember if I said on the show or not, but one of the first ones that came to mind was like, you think of a company like Salesforce, right? They live off the subscription model. Well, I don't think we're very far. I mean, you can see it from here where you just have an LLM. You're like, hey, code. I want my own CRM. I want it to have this functionality, that functionality. Have it to me by Thursday.
Yeah, and it can largely already do that,
which is just nuts. Yeah, is just nuts.
It can make. So I saw like
and think about that with a CRM. Like you don't need it to interface with Salesforce. You don't need to do any of that. You just need it to manage your internal data and your people and follow your prospects and that kind of thing. I mean, there's no need to lock into one of those big companies. The only reason you went through them is because they had the ability to create the software and the programming.
Right. You could have done it, but it would have taken way too much money and way too much time. Now all of a sudden it doesn't take way too much money or way too much time. And that just flattens that whole, and it, it's not going to just be CRM. It's going to be a lot of things where it just flattens it out. And you're like, well, I don't need you anymore.
Yeah.
And then the ultimate productivity boom to me is when you remove a bunch of middlemen that sure, they used to add value, but not enough to warrant how much they took, right? As you chop that down, you think about like if every single person that ever bought a house saved the money they spent and gave to a real estate agent, like, because that's just a middleman that provides, given current technology, rather marginal value add. You know what I mean? So like they're going to get hit by this. Now the good ones are already pivoting, right? You already pivot to like other ways to help people and stuff. And that becomes that's going to be our industry. Like if you want to survive managing people's money, you better find the other ways to add benefit. Because if not, someone will come by with the LLM that can ask you all the same questions about risk and everything and build the whole automated thing for you. Like you never talk to a human, like, you know what I mean?
Yeah.
So you better be out and touching people, developing real human relationships and trust, things that a computer can't go in and replace. So it's going to be everything that even resembles a middleman is going to be under direct threat. And it's also a weird paradox where you see the upside potential of a flattening middleman and making all that productivity gain to us as a whole. But then you're like, but if you do that fast with a general purpose technology, then like you could see, what happens to all these college grads? What happens to unemployment rate? How do we deal with that?
Massive dislocations,
right?
Massive dislocations. Now, the one thing that I will say is I think I see some signs, I see some potential positive signs. I think I see some what we could see as serendipity a few years from now, which is, one of the things that people have been lamenting is the lack of people in the trades, right? That could be this could fix that problem.
What do you mean?
Like in short term, meaning over the long run, you see, AI and robots taking over more and more of these kinds of things. But in the meantime, when you need a new panel wired into your house, in even 5 years from now, you're going to have to call an electrician. You're going to need a plumber. You're going to need something like that, right? So at the same time that we've got nobody going into trades, AI is taking off. I think a lot of kids are going to have to pivot into the trades
right before the robots can hit the trades, probably. But yeah,
probably. But then you were thinking about it too. Like that to me is going to be That to me is going to be a much more gradual thing. Just because when you think about like, climbing through attics, there's eventually robots will take over a lot of that stuff too. But there's so many situations. And I just think about it in my own house where I have no problem with if you told me you have the best robot, electrician, wiring, whatever, that's fine. And I'm okay for you to use that on my house, but I want a human being to be there.
Yeah.
There's going to be those kinds of jobs where, and I think the trades to a great degree are like that. Meaning, if you think about like when you really need a tradesman, it's not when a situation is obvious or simple. You know what I'm saying? Like I even think about it. Like technically, I can install my own toilet. I've installed a toilet before, right? But I'm not going to repipe my house. I don't understand. More complex. You know what I mean?
Sure.
More complex issues, and just through the nature of construction and the way things work, there's a lot more one-off shoot. Anyway, my whole point is, I think the trades are much more safe for an extended period of time than a lot of other jobs are.
Yeah, totally.
Because a lot of those dynamics and.
Which is interesting because technology usually comes for blue collar work, and this time it's coming for white collar work.
Yeah, it's really bizarre, isn't it? We were talking about it in the investment world, just so people have an understanding. And you're seeing this. So like, there are a lot of roles that all of a sudden have become obsolete in finance already. Like it doesn't mean doesn't mean we're getting rid of any of our analysts. It doesn't mean that places won't still have analysts. But when you look at the traditional job of what a junior analyst would do, these LLMs can do the exact same thing for virtually no cost and do it better and faster and more accurately.
Yeah, junior analysts, junior administrative people in finance and insurance and medical care. You name it. Like you either you got to step up your game, and B, you have to use these things to make you better.
Yep.
It's like, because I can use an LLM to be a really solid junior analyst, what I need the junior analyst to do is use the LLM to be an incredible junior analyst.
Superhero.
And I think that's where you're at right now. The people that are doing well are the ones that are, just fusing themselves with the machine to make, themselves just a super analyst, versus, the people that are resisting that are gonna have problems. And this is also an area where I think like really multidisciplinary people that can think and view across different silos into, the way big pictures work together, start to get a big benefit. Because, people are going to get that much better in their specializations, but putting the pieces together, which is not something I don't think that at the moment, like an LLM is that good at.
Right.
You ask yourself a really specific question, it'll bird dog it for you and do a great job. But if, can it see the way all the dominoes fall in the future and in a complex system? No. And some humans have a decent ability to do that. It
reminds me, I remember I didn't really fully understand it. I mean, my dad explained it to me, but I remember something my dad used to say to me is he'd always say, people are obsessed with coming up with the right answer. He's like, it's knowing the right question.
100%.
Right. And this is a perfect example of that, right? Just because, and that to me is going to be the part of AI that I think takes the longest to develop. That ability for AI to start asking the right questions. And like I said, between now and then, if you're somebody that can write or knows the right questions to ask and can ask those questions, I don't think that person gets any less or less valuable. The other thing I would tell people is another piece of advice I got as a kid. Right? Regardless of what happens in the economy, everything needs to be sold. Learn how to sell. Right? Like if I was talking to a group of young kids right now, I would say, look, if you don't show exceptional skills or abilities on the coding or engineering side, I would be like trades and things and soft skills, like sales, right? That's where you want to be. And it's kind of funny because you kind of hear that kind of coming around culturally more. Like you go through periods of times, and it's always kind of been like this a little bit, but you go through these periods of times where it's like being a salesman is like a dirty word, And I feel like lately that's kind of softened a little bit. And I try to tell young people that all the time. I'm like, guys, all you're going to hear are bad stories about sales. But if you can sell, you're always going to have a job
100%.
And you're always going to make more than most people. Like that's just, if you're good at it.
I think a lot of people have a really high view of entrepreneurs and a really low view of salesmen. But at the end of the day, the only way to be a good entrepreneur is to be a good salesman.
Yeah.
Which but like, I think you're right though. That gap is closing to some degree now.
Well, it's even in the so you see it in the finance industry, right? And no knock on analysts. You are one, obviously. But there's this thing, you'll hear them use a term asset gatherer, right? And there's always a bit of disdain dripping off the tongue as whenever somebody uses that term, right? It's like looking down on them. They're not a real investment guy. They're not. And I'm sitting there going, you know what, man? I know a lot of really smart investment people. You know how many good asset gatherers I know? Like 2, right? And well, that's not what builds a firm. The hell it isn't.
I think that gets used a lot of times for the firms that will slap you into
the
a mutual fund stew and call it a day.
Yeah.
And well, at least that's the way I think of, like, when I think of an asset gatherer.
Yes. Yeah. They've got their 8 different ETFs, right? And their cookie cutter computer model that they slap everybody and their mother into. And it's just a game of how many people can I pour into this pie, right? That being said, though, I think that even on the building of a firm, as a guy that's done it, you have this view from the outside that, boy, they must have really hit the ball out of the park and really had some home runs and really done some smart things. And look, all of those things happen. But 85% to 90% of your clients that you've got, the AUM you round up, it's from hard work, pounding and sitting in front of a lot of people. And those soft skills, which is exactly the kind of work that nobody wants to do, right? Because it's long and arduous and it's tough. But those soft skills are not going to get any less valuable.
If anything,
more, like you were saying, which is an angle that I hadn't really thought about.
Same as with robots and LLMs, like somebody's got to sell them.
Yeah. Yep.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
What else?
I wanted to talk about vol control.
Yes. Okay. Yes. I had that on my notes to ask you.
This is, so I mean, it's not like I don't talk about it. I probably talk about it every week, but it's becoming a little bit bigger deal than normal. And this is one of the reasons I've been, at least not bearish, if not bullish, for the last few weeks. Is you knew after the April beatdown, look, systematic, they sold it all. The CTAs, vol control, like they got rid of it all. It's a huge capital base. They got to put it all back. It's like a puke and rally. They puked, and they're going to rally. They're going to keep drinking, right? So the beauty of vol control is you can kind of model out the path it's going to take, because they all roughly do a similar way of doing it. And it involves realized volatility. So not like what's implied in the future, but what actually happened in the market, how volatile it was. And we know from the way they allocate to like 30-day, 60-day, 90-day volatility, you had that massive, massive spike in volatility from the trade war. Well, that's going to start basically falling off the books, right? Because it's been 3 months now. And when that happens, all their models are going to trigger to be like, oh, like this huge volatility spike fell out of our sample, which means that it's telling us vol's low, let's go buy some. So you have these lightly positioned vol control. Now they're already buying and steadily, where it looks like the next month or two, I mean, they're just going to be like, just like Pac-Man gobbling up, all the little coins.
Well, and the other part of it is seasonality couldn't be better for it either, right? Because
it's reflexive. They buy and it makes vol go lower, which means they get to buy more, which makes vol go lower.
And in a period of time where you have seasonally lower volumes, which you do during the summer, and it's seasonally, and again, it doesn't mean you cannot have things happen. We saw last summer. Okay, but generally speaking,
although last summer all the systematic stuff was full. So you knew, like it tips that into that balance over to, hey, let's be careful here,
right?
Whereas now it's like, okay, something big exogenous happens, or we just melt up, just because systematics buy.
Yeah, I think a good way to or look at it, and I've kind of thought about this in the past, is it's sort of like being in a gunfight, meaning you're keeping account of how many rounds the other guy's fired, and you're like, oh, he's out. He's got to fill his ammunition, and that's where you start returning fire, right? Vol control is kind of like that in a sense that when they got a full magazine, like you said, you can see some fireworks, right? They're going to let it go. But when the magazine's empty, they got to reload.
It's a good way of looking at it.
And they got to reload right now.
Right.
Yeah. And in a period of time, like we said, with it is seasonally lower volumes and volatility. And that suggests a grind higher.
And this understanding of this and then options dealers positioning it helped us in April, whenever we had that nasty turn, and last July, like you're talking about, it helped us sidestep that and have some hedges in place. Whereas now you're looking at it like, not yet, like just not in that environment where you can, it makes sense to lean against the market hard, especially while it's really quiet in the summer. But
yeah,
doesn't mean you won't get there. Eventually, ball control, CTAs, all these different systematic strategies will get drunk again. They'll run out of those bullets, and that's when you can poke your head up and go, oh,
yeah, and
they're exposed.
And I was actually talking to one of our other analysts about this earlier today with Pat. I think when you look at this market, and it's something that I've had a very hard time wrapping my head around and accepting and acting on, because it cuts so much against tradition, for lack of a better term, or it cuts so much against convention or the way that we knew convention to be, prior to the last 5 years. And that is that one of the dynamics, and I can't remember if I mentioned this last week or not, but going back to that interview I heard with Rob Citron, the hedge fund manager, he was talking about this. And if I think about the markets now, what is the one thing I feel highly confident in? The one thing I feel highly confident in is whatever risk comes down the road, this market is again going to ignore it until the absolute last minute. That's what it does. I don't know why it started working like that. And there's a lot of different things you can point to. It's a confluence of things, like most things are. But you've got to be aware of that. I think you've got to accept it. And I also think that that's probably going to want to be one of our greatest sources of alpha and outperformance over the next several years, is playing those situations. And to your point, we've caught virtually every single one of them dead on. The only mistakes that we've made is not betting them hard enough. And the reason we haven't bet them hard enough is because when you learn after a while, when things look so obvious in a market, not to bet them, because the market's already paid attention, is already baking into the cake. And we've just learned over and over that function of the market, for whatever reason, is either paused or broken or something. It just doesn't price things in until they happen. Right?
I think it's for the reason we're talking about. I mean, so much of the, such a lion's share of the trading comes from, just rules-based stuff. It's not individuals making decisions based on what we can all read in the news or see in the data. It's just,
responding to conditions on the ground.
Yeah, it's a bunch of drones with a bus ticket. They're gonna get on the bus.
Yeah, and I think that I know that there's an advantage to that, and that is that.
Especially when when their tickets get punched.
Yeah. Well, and look, it's again where I think that, at least for now, I think that we've got an advantage over tech and AI to some degree, which is, it's really, if you think about it, it's really hard for a system to look at two different risks. It can see a risk or what looks like a risk, geopolitical, whatever. This is going to be, and this will be the part of AI, I think, that takes a lot longer to develop. Getting a system to be able to correctly evaluate and rank those risks is a much tougher thing, right? That's by definition like a soft skill.
Yeah, and just second order, third order thinking is something I think it will be slow to get really good at. And even when it does get really good at it, can the average person that's prompting it think well enough, third order, to prompt it well enough to pull that answer out of it anyway? You know what I mean? Yeah,
probably not.
And to go back to how short-term thinking, like, it's not even like just a societal thing. Like, there's a bunch of studies that show literally as a species, we are like compressing our like attention span and our ability to do and think about things for time spans. Like, it's just That's what's happening to us as a species. So the few freaks out there that they can think, a little farther out, like it just becomes like a natural built-in, at least small edge.
You know what's funny to me about that, and I get the science behind it, and it's a dopamine trap, and it's brilliantly constructed. I get all that stuff on social. The thing that I don't understand is, I personally find it boring. Like meaning I get the chemical aspect of it, and I know that we're all vulnerable or open to that to some degree, but I love sitting and thinking about big things for a long period of time. And I actually find it to be one of the things about current culture that annoys me the most, meaning everything. And you even see it in so many of your transactions with people. You're like, it's kind of like talking to your kids, hey, how was your day? Good. You know what I mean? You know what I mean? Just like everything is so truncated. It's like even people like talking about movies. You can't make movies over 90 minutes. Nobody wants to watch them anymore. And I'm sitting there going, dude, I'm like, you tell me there's a really great movie out and it's 3.5 hours. I'm pumped.
I've watched a couple of movies recently where I'm like, this should have been a 30-hour miniseries. Like, what were they thinking?
I know. I'm always like, extend it. That's why some of those podcasts that we were listening to was the one I'm listening to one on World War II.
Carlin.
Yeah. Dan Carlin, Hardcore History on the supernova in the East. So the rise of Japan through World War II. And it's 3 episodes. They're each 4 hours long. I worked through 2 of them this weekend. Just driving around the car, going for a walk. I
think it's becoming a very big thing to take in long form, to read old books. It's like on my podcast that I never do anymore. Like one of the canned questions I have is, what is your favorite book that's more than 30 years old? It's a way to I just want the ideas for old books to read.
Yeah.
Reading old stuff. Like now one of the worst things / best things about AI is it'll give you an overview of anything, and so you can slap a 70-page document in there and be like, just tell me the bullet points. And this is what most people are doing. And I see people now doing it where they'll put in a YouTube video and just give me the highlights. And then it'll give you, like 5 bullet points from that YouTube video. Now, if you go watch it, if it's a good one, there's a bunch of nuance in there that AI is just going to gloss over. Same with articles, if you want to get books, obviously. Now, a lot of books should be a lot shorter, so maybe this will make some of the stupid 300-page books 200, 150 the way they should be. But like nothing, everything is becoming bite-sized, and that we're ruining our own ability to think well. I think by making everything bite-sized, you're just snacking on information all day instead of eating.
Yeah, and there's so little intellectual curiosity. Where you hear people sometimes and you look at them and go, you're not curious about that? You don't want to just go dig into that and figure out why that works that way? Well, no, why would I do that when I can just ask? And I'm like, well, because you're going to get a stock answer. You're still not going to understand the way it works. Right. But I think that's also a personality thing too. Like,
yeah, it is.
I think that's probably something you and I had in common as kids. Like, meaning I didn't want you to tell me what it did. I wanted to understand how it did it.
There's a reason like all those industrial titans were the kids that were like, in the garage tearing their fridge apart when they were 8 years old or whatever. The parents were freaking out.
Yeah. I didn't go that far.
No, I was never that kid with mechanical things. But with other things, like with sports, I, drove my parents nuts with all my stats and everything. But
you had a really funny story. You were like in one of the very first, it was like one of the very first.
Yeah. Not fantasy football, but a simulation league. So we had 32 GMs. So we had fancy computers that would actually run the simulations and stuff, but we did our own drafts to include rookie drafts. We had a salary cap we had to adhere to. So it was just like really being in a league.
Who was your team?
I was the Chiefs.
You were the Chiefs.
Yep.
Got it. And weren't you like 14 when you were doing this?
I was like 15 years old. Yeah. So I was just a bunch of grown men. They had no idea because it was the internet in the early days of the internet.
And they had no idea that they were sitting there with a 15-year-old.
One of them he was a Wall Street guy. And he like invited me up, to go like have some drinks and stuff. I'm like, bro, I'm 15. I can't do that. He's like, what? That was when I blew my cover.
That's classic. I wonder why that didn't take off.
Yeah, because it's not snack sized enough,
Oh yeah, you're right.
You think about how easy it is to play fantasy football. Just drag your little 5 players around or whatever.
I've never played.
And who's trying to draft offensive linemen in a rookie draft? You know what I mean?
Nobody.
Right. No one's trying to go watch film of the left guard from Montana State. But
And you would use real people. So like on your Kansas City team, you might have Ryan Tannehill as your quarterback. It's
I
not
had Alex Smith. Yep.
Oh, you did. Okay, there you go.
And I drafted Wes Welker. That was one of my best draft picks.
Wow.
Yeah.
No,
he was very, very underdrafted in real life.
And then those guys would get credit for those stats in this league.
Right. Every year, whatever those players got would end up becoming a projection for the next year, essentially.
Gotcha. How'd you do in the league?
Mediocre.
Okay.
Yeah.
It was probably tough.
I mean, we ran it for like 3 or 4 years, and then I think probably because fantasy football came along and got big, it died out. Too many guys left, and we couldn't find enough people to fill in for 32 teams.
Yeah, people are always shocked when I tell
30 maybe it been back then.
Oh yeah. Well, no, I think it was 32.
It was 31 or whatever before Cleveland came back. I can't remember.
Oh yeah, that's right.
It would have been after that though, right? No, it would have been before that. Yeah. Yeah,
people always are shocked when I said I've never played fantasy football, and they'd like you love it, and I'm like, that's the problem. Like I don't have any room,
Neither do I, so I just mail it in.
Yeah, well, I know, but still, like, I mean, I've still,
But I do like 8 leagues and stuff the way I would do when I was a kid, When I was in my teens, I was just running a million leagues. I couldn't get enough. Although fantasy baseball was bigger for me than I never
really. Well, that's how it started, wasn't it?
It's a lot deeper for fantasy than football's weird.
And what was it called? It was a microwave or no? It was like a hot plate or like the first league. The first league was like a fried or some like food term. There's like a food. It was a hot roast or hot pan.
Oh, I see what you're saying. Yeah, now I know what you're talking about.
It had a weird name, like it was
rotisserie.
Yeah, or the rotisserie
league.
Yeah, the rotisserie league. That's what it was. I knew it was food something.
Yeah, now I'm
Costco chicken. You can find more about the rotisserie league on InstaFace.
Yeah.
You follow us on InstaFace. Anyway, that does it for me. Kind of got off the beaten path there. Not a lot coming up in data the rest of the week, though, right?
We have jobs this week, and on Thursday, because obviously Friday's Independence Day. So tomorrow we'll have ISM and job openings, and then along the way we'll also have ADP and stuff. So ISM and JOLTS tomorrow is kind of big. Big beautiful bill. They should be probably passing that tonight in the Senate, and then the real work begins because the House hates the Senate version and the Senate hates the House version. So getting those two sides to work it all out is going to be interesting. My guess is you have the exact amount of no votes you can afford from the House Freedom Caucus, but they flip enough of them, to get it through at some point. But they'll probably have to change the bill. They took out the provision that was going to kick illegal immigrants off of Medicaid. And first of all, I think that's a much more complicated, nuanced conversation than I am prepared to have here and all that kind of stuff. But I do think it's bringing up some really interesting legislative and legal questions, right? Like it brings up a really interesting idea that legislatively we're not going to be opposed to people that you can quasi legalize an illegal thing through different legislation. Yeah. And it just, again, not making it, I think it's very nuanced. I think there are people that are illegal aliens that shouldn't be. I think that there are people, legal aliens that shouldn't be here, period. But I think it's very nuanced, right? But that to me is fascinating because you're sitting there going, wait a second, you're legalizing something that's illegal. Sort of. Yep. While not making it illegal and not making it legal at the same, what are we doing here? It is weird. Anyway. And it's notable, so the Speaker of the House and kind of the Senate Majority Leader basically kind of promised, we will keep the $2.5 trillion of cuts, or whatever it was, 1.5, I can't remember now. Because you have a lot of unfunded tax cuts, so let's at least partially fund them. They came to a number deal. Well, this one comes in about $500 billion less than that promise. So the Freedom Caucus is going to want something from that. But the most important thing to me when it comes to this bill is we should ignore all the scoring of it, because the scoring of it has a bunch of sunset provision stuff. It's like, hey, the good stuff starts today. We'll end it later. The bad stuff starts later. The reality of the situation is the good stuff will stay. The bad stuff will not, because this politics, anytime you say like, hey, in 4 years, like we'll take our medicine, we'll eat all our vegetables, we'll do all of our chores. Like, no, you won't.
We'll eat our vegetables after dessert.
Right.
Yeah.
So the reality is it's basically $6 trillion of deficit spending unless they eat all their vegetables, take all their medicine, do all their chores, clean their room. They're not going to do that. So it's going to be close to $6 trillion in deficits. Unless we have a productivity miracle boom our way out of it, and we have, the current, grow our way out of it instead of cutting deficit spending because we whiffed on that part. So I think that's the most important thing. I'm seeing a lot of people twist themselves over the math and like, yeah, you're counting all the stuff they're not going to do.
It almost makes you wonder. This is a bizarre thought. And again, I hate to throw it out because we do have to go. But it almost makes you wonder if going the opposite direction is maybe the right thing for the government to do in the long run is, if we think higher inflation and higher rates are coming and they're a fixture into the future, then maybe you go do a bunch of infrastructure spending right now.
I'm gonna out myself as a giant nerd here, but a few years ago, I feel guilty sometimes. I'm like, when I criticize all these policymakers and stuff heavily, because I do, I'm like, all right, make your own plan.
Yeah.
So I did. And I basically tried to purposely create a very productive inflationary supernova to inflate out of the debt, but in the most healthy, responsible way possible. And so it was basically my plan was exactly what you're talking about. It went the other way.
Well, because if
insane like R&D spending and stuff to try and come up with some like incredible innovations where maybe it helps you pay for this stuff later.
Well, yeah. Think of like now, again, I know it's much more complicated. Okay. But look at where, if you could like exchange, get a bunch of these people off the rolls of so many of these entitlement programs and instead get them on the payroll for an infrastructure project. Okay. Is it ideal? No, but we've seen in the history of this government, generally speaking, the most effective spending has been infrastructure spending.
Yeah, where would we be without some of the prior infrastructure spending, right?
Then you go back in time and look at what those things cost to make,
right?
And look what they continue to produce today,
right.
And you're
a big
just
compounding effect.
Oh, it's insane, right. And it's not perfect, but thinking like that is, I think, what we need today, right? Outside the box, coming up with creative solutions, getting people off the public doles. That's another thing we have to be honest. We have to have safety nets. I'm a huge proponent of having safety nets, but they need to be safety nets. They need not bunkhouses.
Yeah.
You know what I'm saying? And
that's a good way to put it.
And the system is just, again, I don't think it's purposeful in the most part. It's just things like that tend to do that. And if you could get more of those people producing, you know that they're going to be better off and happier down the road, right? Higher levels of fulfillment. You're going to have better, communities are going to benefit from all that kind of stuff. And you keep a large amount of spending, but it's spending that's going to have a positive compounding effect later on, as opposed to what we're spending it on now is just literally like lighting it on fire, right? All spending is not created equal. And that's why when people are like, hey, don't panic, we've been at this level of deficits before. We weren't here for the same reasons, right?
We were fighting a global war against some pretty bad people.
Well, and
last time.
Yeah. And think of the dividends that investment paid, right? Yeah. You're not going to, the spending we're doing right now, it pays negative dividends, right? Because it just comes with more promises to spend more money in the future.
Right.
So yeah. Anyway, just had that random thought.
I could go on that one forever. So we'll.
I'd like to go over that plan. That's interesting. Yeah. You brought that up because I was sitting there thinking, I think you got to start thinking that way. But anyway, as you guys know, you can catch us on social media. And I forgot to do the pause in the middle. Darren's going to be ticked because he warned me specifically about that today. So we'll work on the pause, Darren. I apologize for that. But anyway, you guys catch us on social media. Search Know Your Risk Podcast on YouTube, on Google. Go to knowyourriskpodcast.com. Catch us at bulwarkcapitalmanagement.com. You guys know the drill. As always, we'll be back tomorrow. Have a wonderful evening. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.